Joining me now is Odwa Magwentshu from Momentum Securities to give us his take on markets activity. Odwa, thanks so much for your time today. So on one hand, geopolitical tensions seem to be easing, and then on the other hand, that risk on mood seems to be coming back, and we are seeing some of these equity shares in the green. How are you making sense of everything, Odwa? Is risk back on the table? Just reflecting on the boards I had spoke to the European markets in the red on the back of downbeat commodities. But what we saw yesterday, that tech play really boosting the US markets.
Yes, in terms of global performance right now, the commodities still are in strong play. With South Africa, we're seeing our markets still going quite strong, which indicates or suggests rather that at least the geopolitical risk is still something in the back of minds in terms of investors at the moment. And I do believe that it's still early days to count out anything that could happen. And so I think the risk still needs to be priced in. On the other hand, we have seen it with the results coming out now in the US. We are seeing, for example, with the banking stocks, very strong performances all around, especially with trading. So investors are way more involved right now. It's just a matter of where they are moving their money.
Yeah.
One of which is now looking like Taiwan with the Taiwan semiconductors, very strong performance there, which could then escalate down the line to your Nvidias and your Apples and Googles rather, in terms of we've found interest in the AI story.
And those TSMC numbers really spurring a bit of a rally in those tech counters. And I want us to dig deeper into those numbers, right? Topping expectations as usual. And also the spending plans seem to have somewhat eased the bubble concerns.
100%. Topping by far, not even a simple single-digit increase. If we look at the revenue came in about 30% higher, so very strong in that sense. But also growth margins quite high in the 60s. So in terms of the business as usual, that has been good if we're looking back, but looking forward as well, as you rightfully said. The increase in the capex expenditure, so it does seem like there's at least still a bit of some interest in that front. They did also mention in the outlook that there is still a strong supply demand in terms of the chips as well. So the AI stocks do still seem like a play for 2026 if we take these results as something to go by.
Something that's rearing its head as a theme in 2026 is, of course, the Fed's policy. As when the year ended, we were expecting more and more rate cuts to come through. Taking into account the inflation print we got this week and the jobs numbers last week, what do you expect to come out of the Fed come month end? There has been expectations of a hold.
I do think right now a hold will be on the cards. On my side, I'm holding on I'm betting on a hold, and that's also on the back. Number one, as you said, the inflation print is still quite a far distance away from the 2% target, so there is still a bit of that on the back of people's minds. Also, then job numbers not as strong, and the data might come back as revised because of that slight delay. So there's still the revised numbers to be looked at to see a better, clearer picture in terms of what's happening on that front. However, I think for the past 2 years there has been a quite zealous approach in terms of what the expectation is for the interest rates, and this time I'm happy that there's people are holding off and not as excited for more cuts, and I think that's the way to go about this. There is still a lot more that could happen, with the president in the White House. Anything could happen on that front. However, with today's news rather, with the deal with Taiwan and the tariffs between US and China, that could raise more concerns between the two giant economies, and how they go about the rest of the year.
All right, let's take a look at 91's update, reporting a jump in asset under management at close to £160 billion for the quarter ended December. Not much color there, but I do see that that share price is really running up 4% the last time I checked. Is this on the back of a recovery within the financials, or is it just on the back of that update?
I believe it's a play on both. I
Okay.
mean, if you look at the South African market, especially if, in the past, let's say 4 months, grey listing, we got out of that. We've also in the EU, we've gotten some great, we've taken off that blacklist as well. And then commodities, we are a commodities country, and now commodities have been running quite strong, which is great in terms of tax revenue for the country as well. The South African economy has been growing quite aggressively. Emerging markets are a favorite amongst investors, which also helps us at that front. So a lot of things have turned, and I expect strong performances across the financial sector this year. I think that's going to be the topic or the sector to look at this year. And also now there are also talks on reviewing the repo rate and so on and so forth. So in South Africa, we are seemingly going to the nice direction, and it's a matter of which is seemingly more attractive for investors to come into South Africa. 91 is also benefiting from its offshore businesses, and as we're seeing in the value in terms of asset under management they're getting. And that's why I'm thinking that not only is it just South Africa in a good space right now, but I do think investors are getting more active in terms of trading and investing.
All right, so before we get to your stock picks, we're talking about share price movements there. Aveng, I see, is down 5% after announcing a change in leadership. Why does it seem like markets are not pleased with this move?
I think it's the speed in which it's happened. I mean, in March 2024, we had a retirement or a takeover from the previous CEO, Sean, and now we have this one who hasn't even finished a year, who's also going away, which brings a lot of concern. As much as David Simpson has a lot of experience, he also just joined in 2023 into the company. So there's a bit of, we understand the leadership, the individuals themselves are great. It's not speak to them. It's just a matter of the quickness in terms of how we're rotating out of these CEOs.
All right, let's get your pick. Where are you seeing value at the moment?
For me, it's Naspers. With the big pullback we've seen in the past month, I do think that there is still some opportunity in investing in Naspers. They are still at a 41% discount to the net asset value, and we are seeing a change in operations. If you from burning about 430 million rands and now to a free cash flow positive at 1.2 billion. There is a change in that front, and the share buyback plan as well has helped with the share price. And now once they did the split, it's also quite affordable for more investors to buy some Naspers shares. And that's why I think that there is still some upside for the company.
All right, let's leave it there. Odwa, thank you so much for your time and taking us through trade this afternoon. That was Odwa Magwentshu from Momentum Securities.